Hello everyone and welcome to TTT Markets. I am Fotis Papatheophanous. I'm a professional portfolio manager and my specialty is global macro. This is why I wish to show you today how macro traders build bias. Before I move on, allow me to ask you this. Have you ever been in a situation that looks something like this? So here is the guy is riding the profits and he says to the little guy that is not making any money, I said, my good man, that a rising tide lifts, well, never mind. The point of this funny image is to show you that when there is a strong trend, a strong macro trend in the markets, you have to ride this. If we have strong evidence about certain macro conditions, this is going also to transmit into price action. So it is important to understand what is going to happen next. Have you ever been in a situation where you sell, you buy, you sell high only to find out that the price has been moving higher? You buy low only to find out that then the price is moving lower. Have you been in a situation like this? Have you ever taken profits and then you say, oh, I should have stayed a little bit longer because my profits would have been so much better? This is what we are talking about. If you rely exclusively on price action, then the price itself is going to fool you. That's the point of price action. You will see things, you will think, you will have the impression that you know what is going to happen next. But price action is there to fool you. This is why you need to have a macro bias. And I'm going to show you in the next few minutes how you are going to develop this. What are the exact steps you need to take so you are like this guy here. You ride the wave and you are not all the time in and out, stressful and making small profits. You wish to make bigger profits, but at the same time to feel relaxed and confident. So without any other delay, let me show you this. Your first step, understanding the environment. Without doing this, without understanding the environment that you trade, you are going to fail in the long run. You might have some success in the short term if you look only at price action, but in the longer term, you are not going to make it. The market is going to take the best out of you. So how are we doing this? How do we understand the environment? Number one, we ask three simple questions, by the way. Number one, what are the current economic conditions? What is happening in the world? You don't need to be an economist, but if you trade, you read the news, you watch the news on the telly, you read the news on the internet, maybe you even have access to some financial publications, you understand what is happening now. What are the current economic conditions? Are they good? Are they bad? Do we have inflation? Do we have growth? What is happening? Number two, what is the prevailing theme? So you will identify certain catalysts, certain economic conditions. But what is exactly driving price action? Is it monetary policy? Is it the central bank decisions? Is it the government? Is it some random geopolitical events? Is it the stock market? What is happening? What is affecting the emotions, the sentiment of traders? And number three, which theme of interest is currently acting as the main catalyst that is moving the markets? So let me say that again. Number one, what are the current economic conditions? Do we have growth? Do we have inflation? Do we have dovish economic conditions? Do we have hawkish economic conditions? High rates, low rates? In 2, 3, 4, 5 seconds, what is happening in the world right now? What are the current economic conditions? Number two, what is the catalyst? What is driving prices? Which theme of interest? And we go to number three, you need to pinpoint this exactly to identify the main catalyst. What is the catalyst? So we know what is driving prices, but what is causing the price to behave in such a way? For example, you might say, oh, the price is moving up because of interest rates. Okay. What is happening with the interest rates? What is the catalyst? It could be central bank decision. It could be the government actions and so on. You need to understand this. You need to be able to understand those three catalysts over here and understand your environment. This is an exercise that I do, and it might help you to understand the economic conditions better. Before you even look at the chart, you need to understand current economic conditions. So imagine you look at a world map, you look at the whole globe from a distance. What is happening? You don't need to be an economist. I don't need you to go ahead and tell me some very specific economic theory, the economic narrative. Just tell me what is happening. You watch the news, you watch the news on the telly, you hear the news on the radio, you read about this on the internet. What is happening? What is happening right now in the United States, for example? What is happening in Europe, in Southeast Asia? What is going on? What are the main themes? All I need you to do is just describe it. You don't need to be an economist. Just say, this is happening in the United States right now. This is happening in Europe. This is happening in South America. This is happening in Australia. In Southeast Asia, we have these conditions. Basically, we need the headlines. Just have a grasp of what is going on. It is important that you have a feeling about the narrative in the global economy. Next, where is growth? Where is inflation? Imagine you look at the globe from above, from a far distance. Imagine you are in a spaceship and you look at things from above, from the outer space. So you are looking at conditions, if you remember the previous chart. Okay, where is growth? Where do we have growth? Where do we have inflation? Where is inflation dropping? Where is inflation rising? Allow me to go back again to the previous chart. So you look at, imagine you have a world map in front of you. What is happening with inflation? What is happening with growth? Do we have growth in the United States? More growth than Europe? Where is the area with the highest inflation? And then you create something like this. High inflation, so you create this chart and you have over here in this quadrant, low inflation, high growth. Here we have high inflation, high growth, and so on. High inflation, low growth, and low inflation, low growth. If you could divide the different areas of the world in this bracket, put it in this kind of brackets, where would you put the United States? What is happening with inflation and growth? What is happening with Europe? What is happening with Asia, and so on? All you need to do is just look at this online and have an understanding of inflation and growth. Without understanding this, without understanding the narrative of the underlying economic conditions, you will not be able to understand the catalysts that are driving prices and find the next big opportunity. So again, you imagine you look at the globe from a distance and you try to identify what is happening to growth, what is happening to inflation. So for example, you can look at United States and say we have high growth, stagnant inflation. You look at Europe, slowing growth, stagnant inflation or higher inflation. You need to be able to understand this in your analysis because this is going to help you understand the underlying economic conditions that are driving prices. And what we do, we apply a top-down approach. In global macro analysis, we apply a top-down approach, not a bottom-up approach. Bottom-up is something entirely different. You start from valuation, you start from company analysis, all the way up. This is good if you wish to invest in stocks. and you wish to analyze specific companies. But if you trade currencies, if you wish to trade indices, but specifically currencies, you need to apply a top-down approach. So you start with the bigger picture and you try then to specifically point out what is happening. So you start with the big picture to the smaller picture. So top-down approach, economic analysis. What is happening? Inflation and growth at a large scale. Where are the sources of growth? Where are the sources of inflation? What is happening to specific industries? Which industry is outperforming others? For example, right now, you don't need to be an economist. If I ask you, what about the car industry? Do you think it is booming? What if I ask you though, what about the AI industry? So you see, you don't need to be an economist. All you need is just reading the news. You need some basic information, and if you have the right framework, you can go ahead and do your analysis. I'm going to show you now some charts that are very similar. For example, this one. Again, it is the same thing as before. The difference between top-down investing versus bottom-up investing. We don't do bottom-up. Bottom-up is very good if you are a stock trader. So you are looking at specific securities through specific quantitative and qualitative criteria, and then you move up, you look at the overall market that this company belongs, and then you have your buy or sell signals. With top-down investing, which is what we are doing, we start at the global conditions, the global macro conditions, and then we start nailing it down. Country risk, sector risk, and security. This is happening with stocks, but the same thing is happening with FX. Where is global growth coming from? Where is inflation coming from? Who has higher inflation, lower inflation, higher rates, lower rates? What about the future, monetary policy, the interest rate policy of the central bank, and so on? So this is the kind of process that we follow in global macro. And I'm going to show you one last chart that looks very similar, that had many details, but I thought it would be useful to you. Macro top-down approach. We begin with global factors, macroeconomic and political outlook. Where is growth coming from? You can tell me this. If you look at the globe, which area is showing right now more promising results regarding growth? Which one is suffering? Where do we have higher rates, lower rates, high inflation, low inflation? You can find this out in a few seconds from the internet. Next, country-specific factors, social and political developments. For example, right now of doing this, the Prime Minister of Japan is quitting, and they are looking for someone else to replace him, and so on. So you are looking at things like this: political developments, population, real economy, fiscal policy, balance of payments. Then it becomes even more specific when you are looking at sectors, then specific instruments to express your view, and so on. But do you see what we have done? We started from something like this, sorry, not this. There you go. What are the current economic conditions? What is driving prices? Which theme is active right now? And we are nailing this down. This is why we call it the top-down approach. We begin with the big picture and we narrow this down until we find our unique opportunity that looks promising to us. Next, I'm going to show you an example. This is from an older analysis that I have done, so it doesn't apply to the current timeline. I just wanted to show you an example. Simply ask yourselves this: what is the major global macro themes of interest? For example, it could be the beginning and pace of a tightening cycle in the US, the expansion of the ECB balance sheet, the Bank of Japan, Chinese economic status. You will see here that this is about global macro. So in one column, it is all about global macro. When is one central bank going to raise rates or cut rates? What about government decisions? What about fiscal policies? And so on. And then we have other kind of criteria that is not in the immediate control of the central bank or the government. For example, we have tensions in EU, oil prices, Russian-Ukraine crisis, Middle Eastern tensions, the UK's Brexit. So this is old. Iran, emerging markets, US elections. My point is, these are events on the right column that I don't really know. I cannot make a prediction. I don't have raw data to analyze. It's not the kind of data that you can analyze and you can come to a conclusion. It's political developments, social developments. We don't know, basically. This is the short answer. When it comes to the left column, it's the global macro environment. We are looking at monetary conditions, central bank decisions. We are looking at the economy. So on the left column, I have economic data that I can access. I can see. I know the level of interest rate. I know what kind of growth there is in the United States. I know the kind of growth in Europe. I know if the Central Bank of Japan wishes to lower rates or raise rates. I know these things, and I can make a well-estimated guess. I don't know what will happen with the UK. Why I'm saying this? Because at the time of doing this video, there are some issues with the government. There could be political turmoil there. I don't know what is going to happen. We don't know the outcome of the Russian-Ukraine war. We don't know these things. We don't know what will happen between Israel and Iran and so on. So you see what I have done on the left column. I am listing, let's say, not data, factors, conditions that have to do with global macro and economic developments. These are things that with the data that I have right now, I can make an estimated guess. I can see the most likely path. On the right-hand column, it's geopolitics, political decisions. It could be natural disasters, things that I do not control. So this is how I analyze the environment. And again, if I go back based on these decisions, wrong slide, this one, based on all the information that I have and based on all the analysis, I try to answer this. What are the current economic conditions? What is, from all these conditions, what is driving prices? Which theme of interest is now the main catalyst? Is it an election? Is it the economy? Is it political? Is it something that is out of our control? For example, if I go back here, let me find it, there you go. Is it something that we cannot foresee at all? We cannot make not even the slightest kind of analysis right now, but that is on the right-hand column. We can only make an estimated guess. We can only try to figure out what are the most likely scenarios. So this is when we analyze the global macro environment, this is the kind of analysis that we do. Another important thing to pay attention when we try to understand the bias in the economy is looking at the economic calendar. There are some times that we have a very heavy economic week filled with data, and this is very important. We have to pay attention because the data will dictate our outlook about the future path of the economy. So this is very important. There are other times that the economic calendar is empty and we don't have much to say about economic conditions. So this is something to pay attention because this will dictate the narrative. There are times that we have a very heavy calendar and this will dictate the narrative. And the narrative will shift from one side to the other. What I mean by this is that there are times that we could be looking at purely global macro conditions, purely the economy, GDP growth, inflation, interest rates, and so on. And there are other times that, unfortunately, there is a war happening. There is something else that we cannot control. This is why it is important to pay attention to the economic calendar and be aware of the narrative. The reason we do this is because not all factors affect the currencies equally. And here I list the main factors that are affecting exchange rates. For example, if you are looking at the euro, the most important factor, these are from a scale from 1 to 10, when it comes to the importance and the strength of the importance. So from 1 to 10, what about the Eurozone? You see, the most important factor when it comes to the Eurozone is the interest rate. Interest rate decisions matter the most when it comes to the Eurozone. When it comes to equity flows, that is the stock market, it is not so important as some other area. And the same thing's happening more or less in other countries when it comes to the currencies. When it comes to the Japanese yen, the trade is also very important. The trade and the current account, and again the interest rate differentials, but less than Europe. When it comes to the UK, you see here that growth plays a stronger role compared to the euro area or to Japan. Let me try to explain this in simpler terms. In the Eurozone, interest rate differentials are the most important factor. So the path of interest rate dictates the strength or weakness of the euro. The same thing is happening in Japan, and there are some other factors regarding inflation and growth. When it comes to the UK, of course, the interest rate differentials matter, but also relative growth in the economy. This is also very important when it comes to the UK. This is not true for the Swiss franc. You see, for example, in the UK, growth matters a lot. When it comes to the Swiss franc, again, the interest rate differentials is the most important factor, and its safe haven status. Look, it has a factor of 8. That means when we have a risk-off event, when there is risk in globally in the world, when there are concerns about what will happen to the economy next, this is impacting Swiss franc the most. What about the Asia Pacific region, Australia? Again, interest rate differential very important, but equally Chinese growth and commodity prices very important, a very important factor. So if commodities are rising, this is good for the Australian dollar. If there is a Chinese crisis, this is impacting negatively the Australian dollar. This is not happening in the euro. New Zealand, the most important thing, of course, it's the interest rate differentials, but it is also commodity prices. You might say, why? And how come commodity prices is the most important factor when it comes to the New Zealand dollar? Because one of the main source, the main engine in the economy of New Zealand is milk. So this is what they produce. They have more sheep than people. So the price of milk is an extremely valuable commodity. Actually, not the price of milk itself, you know what I mean. So this is very important. This is impacting the price of milk powder. This is impacting the New Zealand dollar the most. So you can see, depending what we look at, depending on the economy, we have different factors that are affecting the currency. So let me go back again at the beginning. If I go back to this, understand the environment. What are the current economic conditions? Well, if you look at the euro, you have to look at the interest rates. If you look at the New Zealand dollar, you have to look at the price of the commodities, especially milk. When you look at the Australian economy, again, you look at the price of commodities, but also what is happening with Chinese growth. In Europe and the UK, interest rate differentials are mostly the most important factor, but also in the UK is relative growth. This is also very important. So this is all against the US dollar. So you have to understand this, what is driving prices, what is the key theme, which theme of interest is currently acting as the catalyst that is moving the markets. So you have to understand this so you can understand the bias in the economy. If you understand the bias, if I go, let's say, to the main headline, how macro traders build bias, you need to understand first what is affecting the economy? Because milk is not affecting euro, but it is affecting the New Zealand dollar. Growth is affecting UK more than it does in Switzerland. So you need to be aware where the bias is coming from. Otherwise, how are you going to do the analysis? So this is very important. And let me show you this. You ask yourself some specific questions in order to do the analysis. You need to understand, number one, the monetary policy and the expectations regarding the central bank. This is the macro part. This is the global macro part. And you ask yourself simple questions. Which one is hawkish? Which central bank is more inclined to raise interest rates? Which one is dovish, meaning which one is looking to cut interest rates? Which one is neutral? Well, then you need to do is match a hawkish central bank versus a dovish one. Select the best opportunity based on fundamental and technical criteria. As I showed you before, there are different factors that are affecting each currency. What matters for the Australian dollar doesn't matter for the Swiss franc. Interest rate differentials are extremely important, more or less, across the board. But then, each currency is having some unique characteristics. There are some currencies that milk powder, plays a vital role. There are other currencies, like the Australian dollar, where minerals, the mine industry, is playing a very crucial role, commodity prices, and of course Chinese growth. This is not the case with Europe. Europe is all about politics and interest rate differentials. So this is important. So this is what I wanted to show you today. Today we discussed how macro traders build bias, but you need to understand what you are looking for. Otherwise, what kind of bias are you going to build? So you need to understand what is moving the prices, what is affecting exchange rates, so then you can understand the most likely path that the currency is going to move. So this is what I wanted to show you today, and I hope this is going to help you to find more profitable trades. Thank you for watching, and I'll see you in the next video offered by TTT Markets.